What's going on, AC Cal investors? Okay, so one of the things that we wanted to go more in depth was how to understand charts. So here we're gonna see three different charts: Finwiz chart, Pointing Index chart, and big charts. We're gonna use some of the investments already that some of us are following, so we can understand this charts a little bit better. Okay, in order for us to start plugging some of these things, using some of the charts, let me tell you just what I have found out from research that I've been doing. And a lot of these points, might apply to you, some others might not. All I'm doing is just giving you some data from people that have actually made these types of investments work for them and made them some money. All right, so here we go. First thing that we're gonna identify is the beta, and the beta it's just the measurement of the risk of losing money, but also it gives you the opportunity to make money, and this is compared to one of the indexes. So normally we use the SP 500, so we want the beta to be less than 2%, and it's calculated every 36 months. Okay, the next one is earnings or EPS, and from what I read, like this is the most important factor to consider when you are trading, buying or selling a stock. And what we want to do here is we want to compare the type of action from this quarter to the same quarter last year. So let me give you an example. For example, retail. We know that this quarter they're gonna have like much more earnings than they had last quarter. So this is why like we don't want to do this quarter with the previous quarter. We want to do this quarter with last year's quarter because pretty much because it would not be fair to just measure apples and oranges. It has to be like apples and apples. The next important thing is price earnings. So this is just looking at the whether the company is in the red or the green. Normally you want to find companies that are in the green and not necessarily in the red. What I find out is that price index is not a severe factor that is gonna hinder or tell you like this stock is like really risky to buy. So it's mostly just like it kind of gauges the measurement of the stock. Return on investment. Now this is another important thing. So this one, if anything, look at the risk, look at the earnings, and the return on investment or your equity, return on equity. You want to look for companies that have a return on equity no less than 15%. And this has to be in the positive. So you can see some here, I have some here in the negatives. So all of these, you want your numbers to be like, kind of like this one or higher. Okay, the rest, outstanding performer, I'm going to skip because I didn't find that to be like a heavy indicator of, if a stock is good or bad to have, to buy or sell. The float, a lot of studies say that you want stocks that are less than 50 million dividends, selling and buying, out there. So anything more than 50, it means that the stock is just kind of it's pretty much maturing too old, so it might not give you like enough money at the end. So think of your Coca-Cola as your Disney. So whereas this one's is better maybe to go into the drips or the dividends reinvestment plan instead of buying and selling their stock because they give you like very little in return. Institutional investors, this is very important because this is what moves the stock either up or down. If there's too many investors already, then instead of buying more, they will wanna just like exit and leave, and then that's gonna drive the stock's prices down. If you have too little, there's not a lot of interest out there for the big investors, so the stock might never move. So you want to have something like above 70 to 80 where there's like enough room for investors to still like kind of come in and buy like huge numbers of those little pieces of the company. Top dollar. The top dollar is also something to consider because what you want is for the 52-week high price to be next to 10%. So if it's too low, what I was reading with the top dollar is that the stock will grow when their price is going up and is close to the 10% of the 52-week high. So, like this one here is like way too high. So, less likely to grow than, the ones that are like 1, -4, -8, because, that means that it's really close to the, 10%. Okay. So I know that it was kind of fast, but it's actually really simple. So let's take a look at one that I bought. this morning. It was Baba, which is Alibaba, and let me tell you why I bought it, even though it did not meet, um, some of the characteristics, of a good stock. Just an FYI, sometimes you're gonna be able to feel like all these traits, other times you won't. Okay, so let's start looking at beta. So I'm going and open up my first one, which is my FinSwiss chart. So open it up, and then so I can start plugging in some of these numbers. So my beta for this one, if you look at here, okay, let me find beta. So beta is right here, and it's still like relatively new. So this is why I put a little hyphen. Earnings, it's quarter over quarter, so we want to identify how well they did this quarter compared to last year's quarter. So let me look at the EPS. So let me go back to the chart. EPS, and EPS is 260, which is what I have here. Atmosphere, here just look at overall index. If the index is trending up, then buy it. If it's going down, then obviously don't buy it, because if the index is going down, then most of the time none of the companies are trending up. They're going along with the index. Price per earnings. So let me look at the ratio divided by the earnings. And remember, this one was not one of the essential ones. But I still wanted to see the better it is if it's in the green. Price per earning PE. So it's 53.41 and it's in the red, but it's not a major factor. Now, return on investment, remember that we want here 15%, no less than 15%. So let's see what return on investment is. So here is we have a minus because it's still like a new stock. So, if you are willing to take some risk here, it means that it can still grow and it can give you the more than that return on investment, once the company announces. But right now, it's still not showing anything. Okay, the next one is the number of stocks. Circulation right now, it has a volume of 18 million. And here I had 9 million, so let me change it to 18. It changes almost every day, depending on how many they're buying and selling. Institutional investors. So here you can see your institutional own is 42. It's a little bit low. Like I said, normally you want it in the 70s, 80s, 90s. 42 is a little bit low, but all in all, it's still kind of, like I said, it's a bit risky, but not too risky. So the lowest price, the 52 high week, it has to be within the 10%. So right now it's at 2.69. So it was at 4 when last I looked at it. So now it's at negative 2.69. All right. So now we look at the Finwiz, just so we can see. And overall, let's look at, kind of like formulate a score in your head. So here, kind of like formulate a score in your head. So here it's missing this one, but I like this one. I like the earnings, which is one of the most important ones. Um, the price earnings. Okay, this is not a major one, but it's good to look at. Return on investment, still nothing because it's relatively new. I don't like that because I want to see some percentages there, but it's still new, so there's a lot of room to grow or to lose. Number of stocks is less than 50 million, which were good. Institutional investor 42%, and again, it's kind of low, but also I think this has to do a lot with the current atmosphere with the whole China USA trade talks, deal that is going on, that a lot of investors or big companies really don't want to jump on it. But what happens if tomorrow, there's talks that, they come into some sort of agreement and that it favors everyone, then might jump up quite a bit. And then top dollar is still within the 10% of the 52-week high, so it's, I kind of like it. All right, now let's look at the point and figure. So in order for us to understand the point and figure, so the point and figure, this is one of like the oldest charts. You will see there's a lot of fancy ones with all these colors and things like that. But for me, I would rather just kind of like to like start small, and understand it. And once I get the hang of it, then I can get it more complicated. The point and figure, what it states is the following: when a stock is trending up, you get all these X's. And when it's trending down, then you start to get the O's. Okay, I'm going to take this example here, 172. So this means that after it went down all the way to 170, when it went to 172, then it means that it's going up, so they get a little X. Now it went to 174, so it gets another little X. 176, it gets another little X. And then so forth all the way to 190. Now what you need to realize is that this little bar here, it does not tell time or day. This only tells the price if it's going up or if it's going down. So this could have happened in a month, a day, a week. We really don't know until you actually look at the other graphs. And then when it got here to 188, then it might, the price stayed there for a while, and then it went down to 186, and that signaled a downtrend. And then to 184, it went down, and then to 182. So what happened, it was that it had to surpass the 183.99 cents, but once it hit 184, then it went up, then 186, then 188, and then 190. Okay, now here's the theory. The theory states that every time the uptrend, the new trend, the one that is going up, surpasses the previous uptrend, then that gives a buy signal. Okay, so let's go back in history and understand, why this might be true, or why, a lot of investors that go this way. So I'm going back to all the way here. So you can see here there was an up trend, and then it went down. Okay, so it went down all the way to, let me see, let me put it a little bit more. So it went down all the way to 144, and then it went up 146 all the way to 168. Okay, but what happened here, that when it hit 158, remember the previous uptrend, or where it went to, it was 154. So here it signaled a buy. So people that bought it here were able to write it 1, 2, 4, 6, 8, about $10. So 168, and then it went to 166, and then 164. So between this point here is where they sell it. So at least they made like this much commission here, 2, 4, 6, 8 bucks. Okay, not much, but we remember that we're talking in the millions of those people that buy millions and hundreds and thousands of stocks. Okay, and then you can see how once it starts going down, then data always shows that once it trickles down, then it starts to go down. And then, once it hit 130, then you can see here that it starts to pick up again. Some people say, okay, why not buy it here, and ride all the uptrend? You could, I guess, that's one of the ways that you can kind of see and risk it, because there's also enough data that shows that once it starts to trend up, it goes up. But, remember that what it says is that the other theory says that once it surpasses the last uptrend, then that's when you buy. So here it's a 166, and then it went to 168, and then it went to 170. But what happened here is that it went all the way to 168 again, and then it went back to 166, and then it started to trend down again. So though it triggered a buy signal here, if you waited long enough, because you didn't lose that much money here, then you could have ridden the other wave, the other uptrend wave. Or let's say that you sold here, you sold at a loss a little, and then you wait until like it goes up again, the next uptrend, and then the last one, it was a 170, and then it went to 172, so you bought it at 172, and then you were able to ride all up this wave to like 176, and then it went down again. So here is where you will like sell it, and then you can see here was the next 190. It was the next buy signal, and then it went just to 194. But then look at what happened, all the way trending down. Those trade talks, with those wars, tariff wars and all of that stuff, with the United States. You can see what it did to the stock. So if you sold it around here, you did not lose that much money, or you even, broke even, and then you waited and, for that, for everything to pass. So now, a lot of people say, why not buy it here? And again, I guess you could, but just sticking to the trends. So here, it's another signal, but see, kind of has kind of gone down again. So if you buy this signal here, then it kind of immediately goes down. Okay. So what we always want to look for though is that, remember that the next price surpasses the previous price and waiting to ride the wave. So, going back, so after that, you can kind of see, the trend. And I think, I can kind of go through each one of them, but, you get the idea, right? So the next one here, this is why I bought it, because number one is closer to the, like the top, this price here to 194. I'm hoping that it surpasses, the maximum price here, which is 204. I bought it here when it was about 190 because if you look at the trend that is going up and then it went down and then it's trending up again at 190. But this could mean two things. Okay, it might go up, but I'm going to keep my eye on it because I know that if it starts going down, then it keeps trending down. So if it goes, way 186, which is already, 1 2 trends down, then I'm going to sell it because I don't want to happen this to me. And the last thing is the big charts to understand it. So for big charts, what we can see is that, wait, that's Facebook. We can see that there has not been like a lot of movement, with big companies here in the November 4th. You see that there was like a huge buy because it's trending up. So if it was a sell, it would have been like a trending down. And here on the 11, you can see, that it might, I don't know, it seems like a buy too because it starts here and then it ends here. So although, some people sold, some people also bought. But it has not been like something, like on the 4th, nothing big. The 25th, which is today, you can see that there was some people buying because it started here. And now, it ends at a little bit more than 190. And that's when there was some movement here too. But we want to see movement like this one that is actually trending up. And for Alibaba, I don't think that there's going to be like a lot of selling. That, at least that's my opinion, unless if something changes with Trump and also with, the Chinese president there. All right. So now let's look at one of our members from AC Cali Investments. Said that on last week that there was some movement on MYOV. So let's first apply like this theory about finding whether or not it's a good stock and if it doesn't carry a lot of risk. And then let's look at the charts, and then from there we can kind of decide, whether it will be a good buy or wait, until like it gives us a good signal to buy. So let's look at beta. MOB beta. So I have the charts here ready for us. So for MOB beta, we can tell here that it's a relatively new stock too. It doesn't have any beta yet, so we put a little dash. Okay, quarterly over quarterly. Remember that we want to compare last year quarters to this year quarter. So let's look at the EPS. EPS quarter over quarter is 1940. Okay, so there was some earnings there on EPS. Okay, look at trends. Okay, we know that the market is doing okay. Price per earnings. So let's look at my price per earning. And we see that it's a relatively new company because there's another dash there. Return on investment. Okay, let's see, we want to have greater than 15% on return on investment. So return on investment is this big, huge negative number. So this one already for me, this one was okay. I don't care about the beta if it's still a new company, but this company like bleeding money. So it's hard to trust a company that has been losing this much money a year over year. Number of stocks, volume is about 4.1 million. Institutional investments. So it's institutional owned is only about 41%. And then top dollar if it's close to the 52-week high. 52-week high, it's not even close. It's not even in the 10%. So it's like in the 42%, like way below. Okay. So this number here is what like really throws me off because it's they're not making any money. So let's see the point in index. So point index for this one. Okay. So the last time that there was some movement was here when it was at 850, and then it surpassed at 9. So people that bought it here, they were able to ride this wave up. But once it hit $17, it went to 1650, and now you can see that it's trending down. So maybe when it was trending up is when he said that it was a good time to buy. So if I bought it around this area here, now it will suck if I bought it at 17 and then I start to lose money right away. Unless if you want to hold and see if it goes all the way up, you can see that this stock kind of has been all over the place. The last it was at 27, the highest. So it's the 52 week. It's still like, remember that it was close to what, 42%, and you can see why. That's we have the 42% now, because the 52 high is like way up here. Okay, so definitely right now is not a good time to buy it, because remember that it's trending now. Now, if I see that it's moving up, then I might be willing to risk a few hundred stocks and then buy it and then just wait to see what it does. And the last thing that we want to check is big charts. Okay, for big charts, let's see that 19 here, this, and then this price here, this how it shoot up, and then it eventually like it this is where it opened, and it went all the way up, and then this is where it closed. Here it tells me that a lot of companies they bought, and this is why it shoot the price up, but then also like a lot of them started to sell as well, because if it was just like a lot of companies buying, then this other little line where it closes, then it would have been like all the way up here. And then the 21, you can see there was a movement, but then again kind of taper off, and then there was barely any movement here the rest of the days. Again, it's considered to be like a new company, so maybe there might be more movement in the beginning, but for now, this is not something that I'm willing to kind of put my money on, because I like to kind of go in the short thing more, and then just put the money where I can grow a little by little, instead of trying to put some money there and then lose more. So that does it. I hope that we can continue to grow this company together, and continue to share our findings, and then hopefully we can just get a webinar where we can just go over what we have bought, what we have learned about the different graphs, so we can study different things and different methods. Maybe one of our members would like to see how to invest, would like to tell us how to invest in when we do momentum. I'm still not there yet. Still want to kind of hold off, and then once I understand the risk more, just go ahead and do momentum. So I hope you guys learned something about reading these graphs, and if you have any questions, then put them in the group chat, and then we can definitely answer those questions there.